Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin. On the line, I have Lydia Finkley, and she's a Forex trader and author of faithmightfx.com. Lydia, how you doing this morning?
I'm doing good. How are you?
Doing good. So you made that trip out to Stocktoberfest. How was it? What were some of the highlights?
Oktoberfest was really good this year. I thought the third one, I thought it was the best yet, and they've all been really good. Some highlights, I would say traders were optimistic, maybe not bullish, but they weren't, we were just coming out of that dip and the breakdown in the markets right the week before, right before, and traders were still optimistic. Investors were, of course, still bullish on their different market angles or market trends, and so it was really good, really good.
And did you get to talk to any of our Benzinga people that were out there?
I did. I saw Jason, who I've known actually for a couple years now, and I met Kyle. So those guys are great. High energy. Loved what they're presenting. Love what Benzinga's been doing over the years, building momentum, building audience. You guys are doing amazing stuff.
All right. Thank you very much, Lydia. So, what's going on in the currency markets here? I mean, the Fed has stated their case a while ago, and they have followed through on it. And how's it affecting the foreign currency markets?
Well, the dollar is trying to stage a breakout. If you look on the indices, it has. But if we look against certain currencies, besides the yen's doing its own thing. But if we look at other currencies, particularly the pound, the euro, the Aussie, it's still staging a rally, but it's still being confined by key support levels, which is really interesting. You're always kind of wary when the dollar or any currency can't rally on good news, or in the case of the pound, which I've been watching this morning, which missed services, and services is a big part of the British economy. It missed its services PMI number, and it broke down as expected, and then we got this sharp rally back to key support, or now resistance at $1.60. So when things like that are happening, you can't break down on bad news, and you're not rallying on good news. You tend to be a little wary in the market. But, there's traders lining up to short a pound dollar in particular at these levels, which I would still call a good trade. It's just not moving, I think, the way most of us would expect it to, given the news.
So it sounds like you're using. I mean, you're using your analysis, your technical analysis, and you're using the political situation, but you're also using your feel for the market. And so what would convince you that the dollar has another leg higher?
I think let's see what the ECB does. So there's a feeling that there's a coordinated quantitative easing. So the Fed is finished, and they hand the baton off to the ECB. But the Bank of Japan stepped in and surprised the market last week. And there's a feeling that the ECB would trigger some QE in the Eurozone as well. So I think if we were to see the ECB get a little bit more aggressive in their accommodative monetary policy, we might actually see the dollar rally. I don't know why the dollar wouldn't rally further. We got 3.5% GDP, which was an amazing number. The Fed has wrapped up its quantitative easing in the midst of other major central banks still easing. So it's curious as to why the dollar isn't rallying, isn't even higher right now. And so if the fundamentals aren't doing it, maybe it'll take another tumble in oil and commodities. It'd be interesting. My feeling is that the dollar should rally on its own merits, and it's just surprising that it hasn't been able to.
Okay. And what are you looking at for Friday? I mean, so far the ADP numbers that we got were good today. The Fed has, stated their case as far as, what they're doing with the QE. I mean, is unemployment just going to continue to drift lower?
I think so. I wouldn't be surprised to see a good non-farm payrolls come out on Friday, and I will look to see what the market does. Yeah, we would expect the dollar to rally, and actually a good number would kick off another leg in the dollar rally. And wouldn't it be very curious if the dollar did not rally? So it's hard to call what would happen because GDP should have sent the dollar a lot higher than it is. So all eyes are on Friday's non-farm payroll number for sure.
And what did the move by the Japanese last Thursday night? Boy, that was that something that you were kind of anticipating? Was there anything in the charts and the patterns that tipped you off that they were going to make this move?
I think most forex traders expected easing coming out of the Bank of Japan. Been it's been not anticipated, I guess, for much of the year, especially as the Fed was winding down. I don't think anyone expected the extent of it and just how. I mean, 80 trillion yen is quite a move. It's quite a pump of liquidity into the markets, and I think I think that and the timing of it is what might have caused the surprise in the market. But it destroyed the yen across the board, and particularly with the pound yen, which is one of the yen pairs that I take a look at and watch. Yeah, it had been after the FOMC, it had declined. It had gone up to as high as about 180, and then it declined further as the Fed is pulling back on QE. That's been helping the dollar out, but price action did signal bullish, or I guess you should say weak yen. So bullish yen pairs across the board. But I don't think anybody anticipated quite that much QE. I think that it's like 15% of GDP in one pump. It's
Wow.
pretty incredible.
Yeah, and just think, I mean, you got that move out of Japan, and now, boy, you can just wake up one morning and see if Mr. Draghi is going to get his way there with a round of QE over there. He's getting,
Right.
yeah, he's getting quite a bit of resistance on that. Where does that stand in your opinion?
I mean, I don't know. It's really surprising to hear the development coming out of the ECB, where there's high-ranking officials who aren't too pleased with the way that Draghi's been signaling the market and saying, we'll take care of things at any cost. So I'm interested to see what Draghi does say tomorrow. If we get non-decision or no decision with the policy decision, then it's going to be all about that press conference. And he's been, I think most of us thought he was doing what with the central bank's bidding, and I think it came out just this week that they're trying to stymie him or trying to quiet him. Like, this is not what we want to do. Stop making the comments that we're going to do. Stop making comments that we're going to do €1 trillion. I mean, €1 trillion is a
lot
lot
of euro.
too. I mean, comparable to 80 trillion yen.
Wow. Okay.
Yeah.
I just want one final question or comment here from you. Earlier in the show, we were talking just in the general market trend here with earnings, how kind of just been punishing these stocks with the high, price earnings ratios, and really a move towards the value stocks. The stocks with the steady growth, steady dividends, and PE and whatnot. I mean, is that just because people are just throwing in the towel and just thinking, hey, interest rates are just never going up. We're not going to have inflation. I mean, look at the gold market, crude's going down. Is that the sentiment you think that's driving investors and funds into the value stocks?
I think so, and I also think it's it's a back to a new normal without the Fed in the markets, at least so obviously with the quantitative easing ending. And I think market participants are feeling out how the market is going to react. So, the basis of the rally, or a lot of thought, was that this was all because of QE and because the Feds are in the market, central banks are in the market. And now that's not the case. So I think market participant traders were all just kind of We're looking at the markets to see if we're really going to rally on earnings, because like you said, earnings have been good. Will we be able to rally on our own merits now that the Fed is not around? And I think we're all just adjusting to a new normal. It wouldn't be surprising to me if earnings hold up that these stocks, recover and gain ground. But I'm not an equities girl, so I watch before I take trades in the equity market.
I bet you just take longer term trades, right? Buy it and
Exactly, absolutely.
buy it and forget it. Put it under your mattress and just forget it. So, just any final advice for currency traders out there? You were talking about the dollar and a little puzzled. Is there any other final tips you have out there for our currency traders?
Yeah, I think dollar long is still a very good trade. It's pick your spots. Don't chase. I think that's the biggest thing. Even this morning, we got we dropped over 120 pips. And if you trade it, if you chase that move, you got killed because we bounced just as sharply with the last 4-hour candle just closing. So don't chase these markets. Strong dollar is a good trade, but pick your entries wisely.
Okay, Lydia Finkley, Forex trader and author of FaithMightFX.com, a frequent contributor to Benzinga's pre-market prep. Lydia, thanks for your outlook on the currency markets, and we hope to have you on again soon.
Thanks, Joel. Thanks for having me.
Okay.